All right, good night, everybody. This is Sil here, Daily Market Pulse. It is Tuesday, November 26, 2013. So stocks once again ending mixed for the day. Nasdaq was pretty strong today, however. It's been lagging, so it's good to see it push up. In fact, since it was a little bit dicey in terms of the number of distribution days, it did knock off one day today. It was at 7 yesterday, down to 6. It knocked off the October, I think it was the 13th, if I recall correctly. It might be as far back. Maybe it was the 23rd. I don't recall. It was 13th or 23rd. I don't remember now. But anyway, one of those 2 days was gone. Then S&P, unfortunately, then it tacked on its own version of a stalling day, very much a non-performance day, but high volume on all accounts across the board. Nasdaq, New York Stock Exchange both had higher volume today. So when you see, like again, no price action, but yet volume is up, there is absolutely a turnover. There's a shift. There's a turnover of buyers to sellers. So you're anticipating something in the wind on the selling side coming forward. So everything's still above the 8 moving average. Actually, you know what? That may be an error. The TSX may actually have dropped below. I may have made an error there. I may have to update that later. But nonetheless, mixed in higher volume. Uptrend still intact for now. Let's take a look at charts. Okay, Dow Jones right here on the screen. Uh, we had a few sideways days, a couple of spinning tops, then we had a little bit of a drop in the 8 moving average. We had to push higher into the resistance above 16,000. We've had essentially two back-to-back doji-like formations. Yesterday for sure. Today it's the same, but essentially forming what would be considered a shooting star. The upper shadow being at least twice the size of the real body, as you can see here, clearly more than that, but nonetheless, so you're seeing a little bit of rejection at the top the last couple of days, profit taking, but new highs being formed, so they're pushing them higher than selling off. Still a little dicey, of course, and once again, we knew this might be a little wonky this week because one, holiday, long weekend, end of the week, but more so end of the month, so we see a lot of weird turnover in stocks or portfolios, or at least attempting to get themselves to look pretty going to the next month for their clients. So they sell all the junk, they buy all the good stuff that perform, make it look like they all bought that and they all owned it and their performance looks wonderful. So that's how that goes, window dressing as it's called. So we see some weird stuff like that going on now. And of course, volume getting lighter and lighter every day. Tomorrow will be on Wednesday even lighter, partial day, going to the Thanksgiving long weekend, and so on. So that's the Dow. Right now, you're looking at maybe a target back down to 16,000 would be an initial. That would be the 8 moving average, as well as that beautiful round number of 16,000. It might go lower. It's possible it can come lower, but right now those are the first places to think about. After that, otherwise you're just looking for it to break today's high and then keep going higher again. The S&P, I'll show you here, very much a stalling day. You can see the let me see. Did it actually close down? It may have actually. The close was 1802.48 yesterday. Yeah, so actually it finished higher, barely by pennies, right? Pennies, and but high volumes, so consequently another stalling day. That's why it's tacked on to 6. Nasdaq now is to 6 as well. So the count is still pretty high, but right now hanging on to 1800 has that beautiful round number. 8 moving average might also hold. We also have that change of polarity down to 1775 or so. That would be another place to rest, possibly bounce from if it's going to drop down there. But right now everything still seems to be okay, at least for the long haul to the upside. Now higher volume in this state the last 2 days, not a great sign really at these levels, especially when price action is not moving. But we do know there's wonkiness, so you've got to be careful. There could be a big sell-off day and then an immediate rebound, start of the month, right? So it could sell off tomorrow with the long weekend, or possibly Monday, and then immediately, boom, it could bounce again. That's many times what we'll see. So we'll see if that happens again. NASDAQ is next. A change of polarity of sorts at the 3970 or so, maybe 3955, 50, 60 or so. That gold line, in other words, based on the previous high. We had a breakout, the bearish engulfing that pulled back into that support area, including the 20-day moving average. Bounce with a rising window a couple of days ago on Friday, continuation, but it never closed beyond the high of the bearish engulfing that occurred just a few days ago, mid-November. And then, but we did clear new high today, closed up higher as well, finished at 4017.75. Beautiful day for the Nasdaq. For all accounts, because of that rising window on Friday, you'd expect the likelihood of a continuation, and a gap higher yesterday certainly proved that the bulls were present, and they held it with a higher close yesterday as well. It's a question of how they were going to fall through from there, and they did. So it looks all pretty good here. Again, despite the number of distribution days, this is still grinding higher. We'll see how much longer. Right now, no sell signals and kind of mediocre, if you will, sell signals on the Nasdaq Dow because of the doji-like formations, stalling-like formations. We'll see what they do with that, of course, as mentioned earlier. So the TSX for our good old Canadian friends did fall apart today. We talked about how it's been stalling. It's been really struggling at the resistance level for quite some time, showing some rejection with those upper shadows and doji spinning tops, etc., etc. Just kind of hovering with a volatile move coming, meaning you see the Bollinger Bands are pretty tight, so you know a volatile move is coming. But that kind of rejection up there and no real attempt to go beyond 13.5 had a more of a bearish bias, even though the overall trend is still up. The pattern looks really good. They're just those last candles were just very suspicious that they could pull back first. Now, where do they pull back to? Well, they haven't really dropped enough, I don't think. They'd have to come back down to this level, most likely is what they test. So it's the 13.2, well, what is that? 13,300, I guess we'll call it 13,300 level. We'll call it that level there. That would be kind of a likely place to come down to. That's a pretty hard sell today. So I did close, as you can see, below the 8-moving average. I will have to update that daily market pulse, so keep that in mind. I will do that. And the other thing to maybe note was the negative divergence. So we had a series of highs going lower here on the stochastics, with prices, of course, as we know, going sideways. So those coincide right there. So that was maybe a sign. So could we actually see that yesterday? In a sense, it's rising. It's a rising stochastics, but you can see it's a lower high. So it's hard to tell sometimes if it's resetting. But with, again, the candle formations were giving clues of at a minimum profit taking. So there's some selling. It's just not necessarily rapid and huge, but there's certainly signs of profit taking. So there's at least lighten up the load, because there may be more selling to come. And guess what? Shazam. Okay, let's look at the DAX real quick here. DAX has been grinding higher for the most part, doing fairly well. So it had a decent day yesterday, rising a window above, again, this little consolidation for the last 5 days. It popped higher, so looks good, looks strong still. So that looks really good. US dollar, Canadian dollar, it tagged that, almost at 106 level we talked about as a target. We've been talking about this for quite some time, quite frankly, that'd be the target area. Rejected both times with large upper shadows, and then today just kind of a stalemate. Very, very just quiet, profit-taking kind of a day. Fairly neutral following fairly volatile days, but some rejection at the top as mentioned. So this has a shot again to still want to retest that level again. It's possible. If it can break and close above the shooting star and close into the 106 area, then it's got a shot to go higher. Otherwise, it may just fall from here. It may shoot up there, but that's going to be the key. If it goes up there, it's that shooting star high from yesterday that will be key, including 106. If it fails, immediate support into 105. After that, all the way to 104. So let's see from here. Treasuries. Treasuries have been rebounding reasonably well. It's almost flagging like over here now. So lower lows, lower highs are still intact. Decent last 4 days for the most part off this little bottom here near 130. And I say bottom, I say that loosely because was there in fact a support area across there? So it's kind of a loose interpretation of that level right there. So I'm a little surprised it bounced there. We'll see what it does here as it's into the declining 20 and with a rising 50. So it's still below moving averages. Kind of stuck amongst the cluster of moving averages here. Okay, so with that said, I don't see much going on here. I think we need to see something resolve. I'd like to see it above the bearish engulfing high from the 19th to go long. From here, it might actually fade at least a percentage, a small percentage, at least at a minimum, or come back and retest and go even lower again, the lows from a few days ago. We'll see if it does that. Gold has not done much. It started to go positive and then eventually just kind of squandered this red candle here. The last candle you see is starting tomorrow's trading already. So let me. So you see the trends have been down still. Everything's below the moving averages still. Can't get past the 8 moving average. Drop below the lows from the 4 doji back over here in mid-October. Stayed below there sideways with spinning top doji formations, gapped higher today, then faded right back to the original closing prices or opens from the previous days and is holding those levels. So signs that maybe the selling is over. The bulls at this point have got to step in. They need to get back over the goal line over 1250. They need to get into 1260 and then have a shot to 1280, 1290, 1300, etc. Beyond that, but they've got to get over this level first, into 1260 first and foremost. That's the bottom line. Otherwise, you're looking at failure sliding into 1200 if they don't hang on. Crude. Crude is literally in a sideways area here, just hovering on 93, but below 90. Well, it's more like 95, I guess. Let's see, 95 and a half almost. So back and forth, back and forth. Multiple bullish candles, but really sideways, allowing now the moving average to tuck in. We had a nice bullish engulfing, which closed barely above it, the 20-day moving average, but really at the pivot area. So that's really where the resistance came from. And then faded back down to retest 93 once again. But it's very quiet in here. Let's see, the Bollinger Bands are extremely tight. So an extremely volatile move is coming. Now, it's oversold almost. So this could flush really hard and then bounce, or this could bounce from here. So it's hard to tell what it's going to do, but one could certainly capture a move. I'd say you put a sell stop right below 93 somewhere and right above 95.35, and you've got something that's going to probably take shape, and we will see how that works. So that's interesting move there. We'll see how that goes. Let's see what else. Well, I guess natural gas has been kind of on the move into its former resistance. So there it is. It's still trying to go into 390, 395. That's the target. It's still driving toward that. Copper might be worth looking at briefly just because it's the PhD in economy. So it had a crack and snap. Crack support, sideways, multiple spinning tops, came back, snapped back in, holding for now the former resist or more former support, then became resistance, now support again, including an 8 moving average, kind of stuck between a declining 20 and a rising 8. Holding 320, if you will, 321, and then looking for a drive into 330 if it can muster up the bullish momentum it can have. Let's look at small caps. Small caps did break out briefly, at least, or at least moderately, and then continued yesterday somewhat. Nothing very convincing, but today becomes much more convincing. So you see the stair stepping all the way up. A little bit more sloppiness here recently, but it did break above the 2 bearish engulfings, including some of these spinning tops. Back on Friday, Monday a little higher, today even stronger and higher into 113, so that looks good and strong. So if we're going to consider, where this is going to, let's make this the high, let's make this the low. So the 1272 at 113.76 would make sense, or 114 in other words, that would be the target next. Let's see if we can accomplish that. Transports have looked reasonable as well. This needs to try to get over that bearish engulfing high. It hasn't quite done so, plus a round number 130 would be real nice. Hasn't quite gotten there either, but it's not done yet. If it fails here, then it's coming back toward the polarity area near 127, 127 and a quarter or so. Otherwise, looking for a momentum breakout to the upside. We might want to do a fib on this one as well based on this and this. So the 1272 hasn't been accomplished yet at 131, so that would make the most sense. Let's carry on over to retail. Same thing, a little change of polarity, a little scoop. It is above 60, mind you, but 60 is holding us support. It has held for support for 3 or 4 days. It needs to get back through 61 and a quarter, 61.30. It's not real aggressive. You can see the size of the real bodies are telling you there's a little bit of a fatigue factor or a disinterest at this point, and disinterest might be one of them, certainly. If volume is high, then it's not a disinterest at all. It is simply a tug of war, buyers versus sellers. SMH, semiconductor, is still in a sideways range. We'll call it $40 on the bottom and $41.50 on the top. So just sideways, nothing resolved. It's clustered right on the moving averages. I guess you can give it a bullish bias only because the trends are still up, but outside of that, it needs to break above 41.50 to truly be bullish. It needs to drop below 40, maybe even 39.75 to truly be bearish. And the VIX, the VIX has been wallowing down here at the bottom. Had a morning star, briefly went higher into the former pivot area, stopped there. I thought it might actually go into 14.50. It did not. Reverse, came right back to retest the lows at 12 and a quarter. Bounce for the last couple days, nothing real aggressive, however. Showing a little bit of a positive divergence. Stochastics lows are going a little higher, price about the same on the lows, so they might be showing early signs that yes, the markets will actually sell off potentially tomorrow, Friday. Maybe Monday, with a VIX popping back toward 13.50, almost 14 at a minimum. We'll see if that's the case, but that's where we're at there. Okay. All right, that ends that. Tomorrow we'll have another one later in the day. That'll be on the eve of U.S. Thanksgiving. All right, guys, have a good night.